Welcome to the deep dive. We're here to cut through the noise, get straight to the insights, and today we're taking a magnifying glass to the recent second quarter 2025 earnings from a real tech titan, IBM.
Yeah, this isn't just about, crunching numbers. It's really about understanding the pulse of enterprise technology, what's driving innovation, and crucially, where a global powerhouse like IBM sees the future of tech actually heading.
Exactly.
So our deep dive today, it's grounded right in the source material. We've got IBM's Q2 2025 earnings call transcript. That's with CEO Arvind Krishna and CFO Jim Kavanaugh and their press release.
The raw data.
Right. And our mission for you listening in is to pull out the most important nuggets of knowledge, the key insights. Think of it as your shortcut to being well-informed. We'll cover the key figures, the strategic shifts, and maybe some surprising trends that came out. Let's get into it.
Okay.
So first off, these numbers, they're not dry. They really do tell a story. IBM said they delivered solid results across revenue, profit, and cash, exceeding our expectations for Q2.
Yeah, that's the headline. Revenue hit $17 billion. That's up 8% overall, or 5% if you look at constant currency. Operating adjusted EBITDA, $4.7 billion. Operating earnings per share, $4.80. But beyond just those raw figures, what really stands out to you about their financial health this quarter? What's the most compelling piece?
Well, for me, what's really fascinating isn't just the numbers themselves, but the consistency of the beat. It wasn't just revenue, it was profit, it was cash flow. That really reflects the strength, the resilience of their whole business model. It doesn't feel like a one-off thing.
Right. Not just a lucky quarter.
Exactly. And look at the operating gross profit margin, the non-GAAP one. It hit 60.1%. That's up 230 basis points. That's a strong expansion.
And a significant margin growth.
It is. And then there's the free cash flow. Year-to-date, $4.8 billion. That's up $300 million from last year. And that strength led them to actually raise their full-year expectation. Now they're saying above $13.5 billion.
Oh.
Yeah. That kind of cash generation, it just gives them so much flexibility for investment, for innovation, whatever they need.
Okay, so that strong financial footing, it really sets the stage. But let's step beyond the numbers for a second. What's driving this renewed optimism from IBM's leadership? Because Arvind Krishna, the CEO, he shifted his tone. End of Q1, he was talking cautious optimism.
I remember that.
Now, in Q2, it's outright optimism about the macro environment. That feels like quite a significant shift. What's behind that?
It is a big shift. And I think it paints a much more nuanced picture than you get from just reading global headlines. Krishna pointed to several specific pockets of global growth and tech adoption that are clearly fueling this positive outlook.
Okay, like where specifically?
He called out Japan first, said it's reindustrializing and digitizing at unprecedented rates. South Asia, too, particularly India, booming. He mentioned real economic growth rates of 10–12% if you factor in inflation on top of their, 6–7% GDP growth.
That's huge growth.
It really is.
Yeah.
Then the Middle East, Saudi, UAE specifically, also booming, actively diversifying their economies, and technology is a strong piece of that diversification. In Europe, interestingly, he described as remarkably resilient. Seems technology is offering answers there to concerns around supply chains, cyber issues, even labor demographics.
So technology is almost seen as a solution across different regional challenges.
That seems to be the view, yeah.
And what about North America? We hear such mixed signals sometimes about the economy here.
Right. Well, in North America, his take was that companies are basically convinced technology is fundamental if you want to scale revenue without huge capex or adding lots of labor. It's seen as the most efficient path to growth. Simple as that.
Okay.
Now, he did touch briefly on, geopolitical tensions causing some client caution and some U.S. federal spending constraints in the first half. But the key point was he doesn't expect those to be long-term headwinds. So the overall feeling about tech's role in global growth, definitely positive.
Okay, so connecting this back for you, the listener, what we're seeing is IBM isn't just, riding the AI wave. They're actually building the infrastructure, the software that lets other businesses ride it too.
That's a great way to put it.
And their core strategy, it hasn't changed. It's still firmly focused on hybrid cloud and AI. They call it a flywheel for growth. So how are these individual pieces, these segments, how are they reinforcing that strategy? Let's start with software. What do we see there?
Yeah, software showed significant momentum. It was up 8% overall in constant currency. And within that, Red Hat really accelerated, up 14% growth. That was fueled by double-digit bookings.
Okay.
It's playing a huge role in virtualization. They mentioned over $300 million in bookings year to date there, and also containerization. OpenShift is now a leading platform, especially as some competitors have, as IBM put it, taken themselves out of the market.
Interesting phrasing.
Isn't it? Automation also grew strongly, 14%. That was above model, they said.
And they just made that big HashiCorp acquisition. How's that fitting into the automation picture? Is it contributing yet?
Seems like it. They said HashiCorp is off to a great start, already showing 2x annual bookings under IBM compared to before. And they see a 3x pipeline for the second half, citing clear product synergies, like between Ansible and Terraform.
Got it. So good early signs there. What else in software?
Data was up 7%, driven mostly by strength in their AI offerings. The only bit that declined was transaction processing, down 2% this quarter.
Okay, why was that?
Basically, clients were prioritizing hardware spend because of the new Z17 mainframe cycle starting, buying the new boxes first.
Ah, okay.
But they expect it to return to low single-digit growth in the second half, and that's thanks to what they call the Z-stack multiplier.
Okay, the Z-stack multiplier. That sounds like some IBM jargon. What does that actually mean for, someone listening?
Yeah, it does sound a bit like jargon. It's a good question. Essentially, the Z-stack multiplier just means that every time IBM sells a new Z17 mainframe, it triggers this ripple effect. You get increased software sales, increased services revenue, all tied to that new hardware.
Right, so the hardware pulls the software along with it.
Exactly. So as more Z17s get deployed, the associated software sales, the support services, they follow. And that leads to growth in transaction processing down the line. It's a direct synergy, hardware and software working together. And speaking of hardware, infrastructure overall was up a strong 11% in constant currency.
Yeah, that makes sense, especially given what you just said about the Z17 cycle. IBM Z itself saw that incredible 67% increase. They called it the strongest ever first quarter start in mainframe history for the Z17 program. What is it about the Z17 that's making it so critical for enterprises right now?
Well, it hits on all the key buzzwords, but in a real way. AI, security, scalable capacity, those are its core strengths, and they're clearly resonating. The Z17 has this new tell-in-second processor. Get this. It delivers more than 450 billion AI inference operations per day with millisecond latency.
Wow, okay.
And the key is, it allows AI models to run directly on the transactional workloads without needing separate external servers. That's a big differentiator.
Running AI right where the transactions happen.
Precisely.
Yeah.
Plus, they mentioned the upcoming Spire accelerator. That's going to let things like watsonx Code Assistant for Z and watsonx Assistant for Z run natively on the mainframe, embedding AI even deeper.
So mainframe is far from dead. It's actually becoming an AI platform?
Very much so. And beyond mainframes, they also announced Power 11 back in July. That's designed for, performance, resilience, scalability for those really mission-critical data-heavy workloads.
Okay.
And then there's Quantum. Can't forget Quantum. They hit a major milestone there, deploying the IBM Quantum System 2 in Japan. That's the first one outside the U.S. It really underscores their global leadership push in that still nascent field.
So all these pieces, software, infrastructure, quantum, it feels like they're all pointing towards enabling AI at scale.
Absolutely. AI is baked into everything.
And the numbers show it. Their generative AI book of business, they said, is now over $7.5 billion since inception, and the momentum is accelerating quarter over quarter.
Yeah, that's a big number.
But beyond the billions, what are the actual demand drivers? What are clients asking for? And how is IBM positioning itself to meet that demand?
Good question. They're seeing strong demand for AI agents and assistants. Also for RHEL AI, that's Red Hat Enterprise Linux AI. Their own Granite models are getting traction too. And crucially, there's huge demand for their consulting services to actually help companies deploy AI effectively.
Right, the implementation piece.
Exactly. And they got some external validation there too. IBM was recognized as an emerging leader in Gartner's first ever Magic Quadrant for Gen AI consulting and implementation services.
That's significant recognition.
It is. And something else that's really compelling is their Client Zero approach.
Client zero, meaning themselves.
Yes. IBM is actively using AI to transform its own operations, embedding it across, I think they said, more than 70 internal workflows. This isn't just for show. It helps them drive their own competitive advantage, save costs, but it also directly fuels their client engagements. They can point to examples like UPS, Verizon, Mizuho, Nestle, and say, look, this is what we did internally. This is the value we got. We can help you do it too.
That's smart. Eat your own dog food, as they say. It becomes a powerful proof point.
Incredibly powerful.
So how are they expanding this reach? Through partnerships, new capabilities.
Both. They're definitely expanding their ecosystem. They mentioned new or deepened collaborations with a whole list of big names: Oracle, Box, AWS, Salesforce, Microsoft Finance, or WPP.
Mhm.
The goal is always embedding Watson X, their AI platform, into core business workflows people already use.
Makes sense. Integrate, don't just replace.
Right. And from their Big Think conference earlier this year, they rolled out new Watson X capabilities. Like Watson X Orchestrate lets users build custom AI agents in minutes, no coding needed. Comes with over 150 pre-built agents, too.
Ah, making it accessible.
Exactly. Then there's Watson X Data for getting value out of unstructured data more easily. And WebMethods hybrid integration, simplifying how you connect workflows and data across different environments.
Okay.
And finally, on the M&A front, they picked up DataStax this quarter. That's all about adding real-time, scalable data capabilities specifically to support these new AI-driven applications.
Got it. Lots of moving parts, all centered on AI enablement. Now, let's unpack something that feels critical. It's not just how much money is being spent on AI, but maybe where those dollars are coming from. That feels like a subtle but really important distinction.
Absolutely.
So, consulting revenue itself was flat this quarter, stabilizing in the first half. But the backlog, the future work pipeline, that remains healthy, up 4% year over year, totaling $32 billion.
Healthy indeed.
What does that flatness combined with a healthy backlog tell us about client priorities right now?
I think it clearly shows clients are being very focused. They want cost-efficient, high-impact technology investments. They're not just throwing money around. And IBM's ability to show tangible ROI, especially using that client zero story we just talked about, that's key. It's how they attract and keep these big consulting engagements.
Right.
And the generative AI part of consulting is particularly strong. Over $1 billion in the quarter now. There's like 17% of the total backlog, over 20% of the new bookings. And importantly, it accounts for over 10% of consulting revenue. And they said it has a 3-point margin differential, meaning it's more profitable work.
Higher margin AI work. Makes sense. But what about this interesting note that contract duration is actually shorter now, down 6 months from last year? That seems counterintuitive for big projects.
Yeah, it does seem a bit odd at first glance.
And how do we square that with the 18% decline in overall signings this quarter? They're claiming new business is up, but total signings are down. Help me reconcile that.
Okay, let's break that down. It sounds contradictory, but there's a logic to it, according to IBM. The shorter contract duration, they say, actually indicates they're converting signed deals into actual revenue much faster. They called it much more higher revenue realization. So faster time to value, essentially.
Okay, getting the money in the door quicker.
Right. Now, the 18% decline in overall signings, that's the total value of all new deals agreed upon in the quarter. They explained that was largely, almost entirely, driven by a bunch of large early renewals that happened last year in the comparison quarter.
Ah, so big renewals last year made this year look smaller by comparison.
Exactly. And those big renewals, by their nature, often don't generate much new immediate revenue. Sometimes they can even compress margins a bit if they involve discounts. The really crucial part, though, the metric they emphasized, was net new business penetration. That means actual new clients or new work with existing clients. And that was up a strong 13% year over year. They acquired over 200 new clients in consulting. So underneath the renewal noise, the actual new business engine seems strong.
Okay, that clarifies things. So it's a mix of timing with renewals and genuine new client growth.
That's the picture they painted, yes.
So coming back to where the AI money is coming from, is it all new spending flowing into the system, this big wave of AI investment? Or are companies sometimes just redirecting their existing tech budgets towards AI? Is there a risk of, cannibalization?
That's the million-dollar question, isn't it? And IBM sees different dynamics depending on where you look in the tech stack. For things like hardware, semiconductors, basic infrastructure needed for AI, they see that as completely incremental. Companies are buying new stuff specifically for AI workloads.
Okay, so new servers, new storage for AI. That's new spend.
Right. Same for the enabling software layers, like the platforms to build and run AI. They see that as purely incremental, too. No cannibalization there.
Right.
Now, when they embed AI into their existing software products, think about their own tools like Apptio or Turbonomic, getting AI features, that's interesting. They argue it makes those products better, helps them compete better against others. Essentially taking market share from competitors who can't embed AI as effectively. So it's competitive displacement, maybe not cannibalization of their own stuff.
Right. Using AI to win deals they might have lost otherwise.
Exactly. But in consulting, it's a bit different. There, they acknowledge that dollars are often being redirected towards these big transformative AI projects. So while those AI transformation projects are booming, some of the more traditional work, like custom application development, might be getting cannibalized or shifted towards AI initiatives.
So it's not always net new spend in consulting, but rather a shift in priorities within the consulting budget?
That seems to be the nuance, yes.
Hmm.
A reallocation towards AI's perceived higher impact.
Right. That distinction is really key. So for you listening, it's not just about the size of the AI pie, but how the slices are being cut and maybe reallocated from other parts of the plate.
Well put.
So what does all this mean for IBM's confidence moving forward? It sounds like they're not just, hoping for growth. They seem to be actively building it from the inside out through productivity gains and using their own AI.
Exactly right. IBM seems laser-focused on driving efficiency, driving cost savings by using technology, especially AI, in their own workflows. And what's fascinating, as we discussed, is how that internal AI adoption for productivity isn't just saving them money, it's actually fueling their client engagements too.
The client zero effect again.
Right. Being their own best case study demonstrates the real-world value. And that's incredibly compelling for other large enterprises trying to figure out AI. And the savings are real. They're actually raising their annual run rate savings target. They now expect to hit approximately $4.5 billion by the end of 2025.
That's up from
$3.5 billion they were targeting at the end of 2024. So an extra $1 billion in annual savings they plan to wring out.
significant.
Very. And these internal initiatives, they're directly fueling margin expansion. Operating pre-tax margins were up 90 basis points in the first half. They expect them to expand by about a point for the full year.
So the productivity push is hitting the bottom line.
Directly, yeah.
And what's the bottom line then for their overall outlook? Are they sort of doubling down on this positive sentiment we heard about the macro environment?
Absolutely. All of this, the financial performance, the strategic execution, the internal productivity, it underpins their confidence. They reiterated they're confident in delivering sustainable, profitable growth, driven by, their disciplined strategy and what they see as a very durable business model.
And the guidance reflects that.
It does. They continue to expect constant currency revenue growth of at least 5% for the full year. And as we mentioned earlier, they've raised the free cash flow guidance, now expecting over $13.5 billion for the year. So yeah, it's clear they feel very good about where they are right now and their trajectory going forward.
All right, so just to recap for everyone listening, IBM delivered a really strong Q2 2025. They beat expectations pretty much across the board: revenue, profit, cash flow. This seems driven by a resilient business model and a surprisingly maybe optimistic global macro view from their CEO, seeing tech demand holding up well. Their core strategy, hybrid cloud and AI, that flywheel, is clearly paying dividends. We saw growth in software, especially Red Hat and automation.
And that huge jump in mainframe demand.
Right. Incredible demand for the Z17, particularly with its embedded AI capabilities. And they're demonstrating tangible value using that client zero approach testing and proving AI internally first, which seems to be attracting new clients and driving really significant internal productivity gains.
A pretty positive story overall.
It really is. Yeah. Which leads to maybe final thought for you to chew on. Given IBM's deep dive into AI agents, automation, both internally and for clients, what does this tell us about the future of work within large enterprises like IBM and their customers? And maybe more broadly, how might this client zero approach, where companies really rigorously test and optimize their own products internally before rolling them out, how might that redefine the tech industry sales cycle, the development cycle for you, whether you're a customer, an employee, or even an investor?
That's a good question.
Something to consider as AI continues its rapid march into pretty much every facet of business.